It is such a pleasure to be joining you right here on the India Development Debate on ET Now. I'm Supriya Shrinate. We're going to put the spotlight on the power of one, the big bank merger, but coming up at 9:30 p.m. we shall also discuss the state of the economy, the government's 5-point prescription, the big hits, the misses, and how is this going to really pan out. That's coming up at 9:30 p.m. with guests that you don't want to miss. The much-awaited bank consolidation is finally here. In a determined move aimed at strengthening the public sector banking system, the Modi government today signaled the merger of Vijaya Bank, Dena Bank and of course Bank of Baroda. The merger will create India's third largest state-owned lender after SBI and PNB with a combined market cap of a whopping 48,000 crore rupees. The move comes after PSU banks failed to take any preemptive action on the bank consolidation after a proposal to that effect in the Gyan Sangham in March last year. In terms of bad loans, it is a merger of one decent bank, which is the Bank of Baroda, with a good one, that's Vijaya Bank, and of course a very toxic asset like Dena Bank. As far as synergies are concerned, it is seen as a good move and a smart move, as Vijaya Bank has a strong presence in the south. BOB and Dena are predominantly west-based. Finance Minister Jaitley explained the rationale behind the selection, stating that the government doesn't want to preside over the merger of relatively weaker banks. The Consolidation 2.0 and the rationale for this is our big topic of discussion and debate right here on the India Development Debate this evening. Let's take this across to an expert panel that's joining us right here. Mr. R.K. Bakshi, former ED, Bank of Baroda, joins us. Vijay Khannan, former CEO, Indian Banks Association, is here with us. Mr. R. Gandhi, former Deputy Governor, RBI, is here with us. And of course, to take the discussion forward, I also have my consulting editor of ET Now, Maithili Bhusnurmat, right here. Maithili, if I may begin with you, alternate mechanism has recommended PSU bank consolidation of Vijaya Bank, Bank of Baroda and Dena Bank, the merger of a good, a not so good and a rather ugly bank. Is this a bold decision? This is going to create India's third largest lender with a market cap of nearly 48,000 crore rupees. Will you call this a bold decision?
Well, I'd call it a rather unwise decision. I find nothing to commend and a great deal to condemn the decision. And in fact, Supriya, I think I'm going to be a minority in this panel, so you might find my views a little extreme. But frankly, you put it very well. It's the good, the bad and the ugly. And when you put them together, I think we just get one ugly bank. Because frankly, mergers all over the world, not only in the banking sphere but in other spheres also, very few mergers have really been outright successes. And in the banking sphere, the last merger that we saw of two public sector banks, that of New Bank of India and Punjab National Bank, it hit Punjab National Bank so badly that it took years for the bank to recover, Punjab National Bank. And in this particular case, these are three nationalized banks. And apart from the fact that Dena and Bank of Baroda almost overlap in terms of geographical coverage, and Vijaya is the only bank which is south-based, Karnataka-based, there's really very little that they bring together. There's no logic, there's no commercial or economic logic. It's merely driven by the government's desire to show that they're doing something by way of reform. But there has to be some logic, some business and commercial logic at a time when banks are already struggling with a whole host of other problems, primarily with fighting the NPA mess. This is a needless self-goal. I really do not see what purpose it serves. Yes, and one last point, the Narsimham committee had recommended that we have a few large banks, but that recommendation was made way back in 1991. Since then, things have changed dramatically. In fact, one of the learnings from the global financial crisis is that large banks can be more problematic. Too big to fail only applies to large, systemically important banks.
Yes.
Small is beautiful.
Okay. Okay. Small is beautiful, too big to fail is perhaps not the right prescription, may have been the right prescription in the 1990s, doesn't hold in 2018. But Mr. Bakshi, let me come to you. Maithili is calling this a self-goal because she believes there is no business, no commercial logic to do this. I'm really asking you to, to respond to that. And because, does the model of merging one stroke, 1 week and one mid-size, not so weak, reasonably performing bank with two different geographies really work? That's the big question. Mr. Bakshi.
So I think Maithili's point is even against consolidation, because she thinks small is beautiful, which can be one point of view. But let us first analyze the landscape. In India, 23 banks in the public sector is not a wise thing to have. There are many banks which were very small, which had lost strategic direction, which were more or less meandering for quite some time, and otherwise also, even if they were functioning, 23 banks in the same space. So it allowed for decisions which were not optimal. Borrowers could do shopping. Many banks could do small loans, but when it came to increasing the limit, reviewing the limits, or taking other strategic decisions, the decisions will get stuck in one bank or the other bank. Therefore, the government has brought down the number of banks in a consortium to some number, but then it's also wiser to have some consolidation in the public sector banking space, that we have some limited number of smaller but larger and well run banks which have got synergies. The idea that these three banks, if we come to address the idea that these three banks don't make a good combination, I don't agree to that. Dena Bank, in fact, I think it's a very intelligent move, a bold move, yes, and a very intelligent move, in the sense that Dena Bank and Bank of Baroda both are West-based banks.
Mr. Bakshi.
Dena Bank is a much smaller bank compared to Bank of Baroda, and Bank of Baroda.
Okay. Mr. Bakshi, but Dena Bank also has 22% gross NPA levels. It's a very toxic asset. But anyways, just hold your thought there. I'll go across to Mr. Kannan and Mr. Gandhi. And Mr. Gandhi, Mr. Bakshi said there are 21 banks in India, public sector banks. Some of them are meandering. Some of them have lost their way. Borrowers are shopping. One doesn't get a sense of the banks being in the pink of health. We know that. 11 banks in India are a part of the prompt corrective action list. Are there enough strong banks to rescue these 11 given the formula that is being followed?
See, this is the first experiment. So, yes, we have to find solutions for the banks which are very weak, the PCA banks. There are several strategic decisions could be taken, and one of the solutions is this way of merging and amalgamating these banks. So here the Dena Bank, obviously it is the weakest bank among this one, but among the weaker banks, Dena Bank is relatively less weaker as compared to, let us say, IOB or United or UCO, where the problem is really very deep. So instead of picking up that kind of bank, a relatively simpler problem bank has been chosen for merger. So that way, this is a merger of two good banks and along with a small problem bank. Out of the total 15 lakh crores of the merged entity, the Dena Bank brings about business of less than around 1.7 lakh crore only. So that is hardly about 10-15%. It will be 10% only. So the NPA alone, which gets added to the merged entity because of the Dena Bank, in terms of the amount, absolute amount, it will be very small compared to the total merged entity. So rest of the positions are positive in this merger in terms of reach, in terms of number of branches, in terms of total business, and the strength both Bank of Baroda and Vijaya Bank has. So that way, I would also go along with what Mr. Bakshi did mention, that it is a wise move or it is a intelligent move to make these three banks.
I tend to agree with Maitri. She's in a minority here, and which is why I'm going to throw my weight behind her and the arguments that she's making, because all three of you are for this merger. But Maitri, I'm going to come back to you for a question. I'll go across to Mr. Kannan. And Mr. Kannan, it's the alternate mechanism that was set up under the leadership of Mr. Jaitley, which has recommended that, of course, individual banks and their boards will have to now decide. But where is commercial decision making here? This is a top-down approach. It's coming from the government. Do you think any of these banks can refuse it? This isn't commercial decision making. This isn't how boards decide mergers. And also, given the geographical spread, do you think this makes sense? Is it a well thought out decision? Or like Maitri says, what's the big logic behind it? It's an idea that has outlived its relevance, merger of banks. Mr. Kannan?
Yeah, I was one of the early votaries of consolidation. I've always been saying that the Indian economy doesn't need 20 banks, and many of them pretty small in size, and each of them trying to become big by actually doing some large corporate advances, much to their own discomfort and subsequently what we saw. Overall, I feel that this particular merger was one of the steps. You're right in the sense that if you purely look from the geographical angle, having two banks from the west and one bank from the south will not make much of a dent. But the choices are limited. There are various options of doing merger. One could be on purely on region basis. Second could be on the basis of a size. You can have 3 or 4 banks which have equal size. And then lastly, and one of the most important things which is considered was the platform, so that the merger will be much smoother. And in that way, I think Bank of Baroda being pretty strong bank, Vijaya Bank is strong bank but a small bank, and Dena Bank, although it is a very big bank, but if you see, look at the size, if you actually merge with the merged entity, I think as Mr. Gandhi also mentioned it, 10% will hardly make much of a ripple. Yes, I'm not saying it will not at all have any impact, but it will not make much of an impact. And I think in the long run, maybe 1 year down the line, you will certainly see the benefits of this. It's not something which is not possible. One. Second thing is, corporate decision-wise, I think, instead of the smaller banks actually hankering after the industrialists and saying, give me 50 crores, 100 crores, 200 crores, I think a single decision by a large bank, corporate banking will be more useful.
Okay. And you're also piggy banking on the larger banks. Give me a second because I'll go to Maithili for a minute now. And Maithili, you know, you clearly are a minority, but I'm going to ask you a question that Mr. Jaikumar, CEO of Bank of Baroda, did state. He said that the merger will help in higher CASA and a more well-diversified loan book. Do you believe, I mean, why don't you believe this is going to help the banks lend at a faster pace? And doesn't this also improve the bank's ability to expand significantly, the point that everybody else on this panel seems to be making?
Well, yes, Supriya, as I warned you in the beginning, I would be in a minority, but as a journalist, I think one of the privileges of a journalist is that one can speak without mincing any words. And not worried really about stepping on toes either. So for the simple reason that just let me come back to the two issues that, you know, the earlier speakers had said. One was that, you know, there's no need to have so many banks in the public sector, so you need to consolidate. But on the one hand, is there not a contradiction? You're saying you need to encourage competition, which is why you opened up the banking space. You gave licenses to new banks because this is more the merrier. Competition is the answer to everything. So on the one hand, you want to allow more banks to come in, saying that competition is good, but on the other hand, you say, no, why do we need so many banks? Let's consolidate. Clear contradiction there, number one. Number two, no bank is weak or good permanently. Let us remember that Vijaya Bank was once upon a time a weak bank. Today it is improved. Indian Bank was once so sick that its entire net worth, if I may speak in technical terms, had been eroded. Then we had a management change, and today Indian Bank is one of the good banks. All the eastern based banks are in a terrible shape, but you don't want to touch them with a barge pole for various political reasons. So the entire idea that merger is good, it's only a cosmetic change. If you really wanted to improve the state of Indian banking, what you need to do is allow these banks to function as board-run companies, not with government telling them, oh, it's a good idea to merge, and then have the boards meet and sign duly, obediently on the dotted line. That's not the way you function. Unfortunately, these are things that cannot be easily said, and government needs to show that it's doing some reform. So there may be political economy justifications, no commercial, no business, no logic at all.
Right. No, you know, you've hit the nail on its head that this is not a decision taken by the board of the banks. But let me just move forward. And Mr. Bakshi, the gross NPA of Dena Bank is at 22%, which is the highest in the industry. For Vijaya Bank, which is a better performing bank, its NPA levels, gross NPA levels are at 6.9%. And the largest of the three, that's Bank of Baroda, the NPA levels are at 12.4%. The merged entity will have a gross NPA of 13%. But is this the way to deal with NPAs? Is this at all resolving NPAs? Aren't we masking them once again?
No, how are we masking? They are not getting masked. After the AQR, all banks have declared NPAs to the satisfaction of auditors and regulators. RBI is keeping a stern eye on the banks, and banks are getting penalized and getting warnings if they are trying to hide. Auditors are getting penalized. So, and consolidation, how does it lead to masking? It's not masking. And it is not the merger is not meant to immediately serve as a magic wand for NPAs. No, that is not the objective also. But the merged entity is not worse off in NPAs. Its NPAs are slightly higher than Bank of Baroda and slightly lower than Dena Bank. So the merged entity, if we talk of net NPAs, the Bank of Baroda is I think 5.4, the merged entity will have 5.7. So that's quite close. What will happen is the NCLT accounts are generally common among the banks, and therefore the decision making in NCLT process or other processes will become smoother. Many times the decision making gets stalled because one small bank is either not able to lend additionally, not support the restructuring because of whatever provisioning or other requirements, or just simply because the decision making is slower there. As to the Maithili's point that it's a government driven merger, let me say consolidation has been discussed a lot in the banking industry by various stakeholders.
Okay, Mr. Bakshi, I think Maithili wants to make a point there. Maithili, very quickly, we'll let you intervene and then go across to both Mr. Kannan and Mr. Gandhi. Very quickly, Maithili, please come in.
Yeah, the very quick point that I want to make over here is that small banks are no longer a problem, because now you can just 66% is enough to carry a decision through in the committee of creditors for the NCLT.
Yeah. That's a valid point indeed. But Mr. Gandhi, if I may come to you, I mean, if I may take the decision forward from just this bank to other banks, you know, Mr. Rajiv Kumar, the banking secretary, pointed out the fact that the SBI merger has gone on so well. But can we compare the two mergers? I mean, why is the SBI merger being taken as a yardstick of success? Can we compare the two? Because at least in SBI's case, they had the same tech platform. Here, the technology platform is also going to be different for all these three banks. And this will require larger change than SBI had to do. Mr. Gandhi.
See, the consolidation right now, it is not being seen or should not be seen as a problem for dealing with bad banks. That is not the position. Consolidation, the entire set of people, including myself on various forums earlier, we have been advocating or suggesting for the greater financial strength of the banking system as a whole. So that's why it was being promoted. Yes, incidentally, this is also seen as a chance for helping solve the problem of small bank, big banks also. Set aside that. In any case, comparing the State Bank of India mergers with its associate banks, and yes, obviously that is an exercise, that is an experience. We have to learn positive lessons and otherwise also from that exercise. That's what I think the Secretary DFS mentioned, that we have gone through one big exercise of consolidating in the public sector bank space. And we are hopeful and we are confident that we can go ahead with the next merger also. So that is a positive thing, that it has already been tested, number one. Number two, here these three banks incidentally have the same technical platform. So that is also actually a positive point. The actual problem, if at all can be foreseen in any merger, will be the people, because three different, even though they are all from public sector, each public sector bank has got its own small culture and the attitude of the people also different. So that the merged entity, how all of them are going to coexist, there will be initially some challenges will be there. That needs to be solved by the leadership, which Maithili also mentioned, that so long as there is a good leadership, you will always find solution.
No, I think the finance minister has also asserted that not a single job will be lost in this process. But Mr. Kannan, I'll come to you. Do mergers like these also take down the government's recapitalization requirement, the Basel III requirements? I mean, because, you know, there are some stakeholders who've been on the channel and experts who've said that the government's own, recap amount goes down substantially. Is that also one of the reasons why the government could be pushing consolidation in this direction?
It's not necessarily the case. What happens is, you just look at this like a merger or three divisions. If two divisions are doing very well, you can actually take care of the third division and slowly prop up the third division also. Yes, it may not happen simply, you keep it as a separate division, but if you merge it, I think the third division also will start performing. And to that extent, the excess if at all there is some small additional capital which is already available with the other two banks, that could ensure that to the extent of a recapitalization which has to be done separately for each of the banks, to that extent the government's need for recapitalization completely with the third bank, which is in a very bad shape, will be reduced. Overall, I feel the three banks will be in a position to take it forward. As Mr. Gandhi rightly mentioned, the single platform, which is one of the biggest advantages, where when SBI did the merger of the two banks first and subsequently the 5 banks, is going to be a major advantage because the product is the same. Individual small changes, parameterization could be slightly different, but I think in the long run that particular thing is going to come as a major advantage, and the 3 banks will be in a position to do some turnaround maybe 1 year down the line. It's not going to be 4 to 6 months as they've been saying, but maybe 1 year down the line.
Fair point. Okay. Mr. Kanal, hold that thought. I've got time for 2 quick last questions, and please make them brief. Mr. Bakshi, coming to you. The government owns majority stake in 21 lenders, which account for over 2/3 of India's banking assets and a lion's shares of its NPAs. Is consolidation going to be the way out? Is consolidation the real reform of India's banking sector? Because what has also been recommended, prescribed, which most governments haven't done and don't want to do, is reduce government ownership to less than 51%, or in fact even lower to 36%. Is this real reform?
See, it is one of the needed steps to be taken for bringing strength and synergies in the banking. It may not be the only reform. In fact, the DFS secretary very clearly narrated all the various steps or reforms that have already been initiated, and this is in that sequence, and this is definitely not the last. There will be many more. Governance needs to be continuously improved. With the lesser number of bigger banks, the better synergies of skill sets available, better board level governance can be seen to emerge in these banks. I don't think this is the last of these. This is a step in the right direction.
Okay. Okay, so many more giant leaps will have to be taken before we can move to a more reformed banking space. Maithili, we'll let you have the last word, and I think the first is, to be the devil's advocate, no bank in India has ever gone down under. The government has always stepped in and has always saved a bank. Isn't that the right thing to do for a market like ours? You know, people trust banks, people put all their money in banks. You can't let go banks under. That's one point. And the other point also is that the dust had not settled on the LIC IDBI bank deal, and there was so much of criticism being hurled at the government. But the government goes right ahead and talks about this merger. What does that tell you about, you know, dealing with mergers, dealing with acquisitions in the banking space?
Well, I would call this a sham reform, Supriya. It's not true reform at all. As I said, if we want to see true reform in the banking space, we do need to allow these banks to be run as board-run banks, and that is with arm's length distance from the government. So if there was a merger proposal, it should have come originated from the boards, and without a nod, a nudge and a wink, as it were. It should have come genuinely originated from them. That has not happened. As far as banks not allowing a bank to go down, as long as the government is the owner of a bank, regardless of its financial position, I assure you, it would never go down. People would still have faith. And I revert to the story of Indian Bank. Indian Bank's net worth had been completely eroded. That means the bank was not in a position to repay its depositors. It made no difference at all. People still continue to put money in them. Contrast that with what happened to ICICI Bank a couple of years ago. A sound bank, but there was a run on it because it was privately owned. As long as government is the owner, the sovereign is the owner, there will always be faith in a bank regardless of its financial position. That said, doesn't mean you don't have to do anything about their health. You have to do something about the health of the banking sector, but not in this way.
Okay. Okay. All right. This is not the real reform, is the word coming in from Maithili Busturwar, but others on the panel believe that this is a step in the right direction. We'll leave it at that, completely out of time on this edition of the India Development Debate. Mr. Bakshi, Mr. Kannan, Mr. Gandhi, and of course Maithili Busturwar, thank you very much for joining us on this edition of the India Development Debate. We take a quick breather and we are back next. We put the spotlight on the macros and the rupee that needs to be rebooted.